Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar, plus investor sentiment. Overall, high-level summary, S&P, NASDAQ, and Dow Jones are showing further downside. Investor sentiment is increased on the bullish sentiment, which is kind of strange. Economic calendar, the high-level side, look out for Friday numbers in terms of U.S. employment report, U.S. unemployment rate, U.S. hourly wages, plus Fed Chair Jerome Powell speaks at 11:25 a.m. This is again for Friday, April 4th. In terms of inflation data that came out and spoofed the market, I would say I think that overreacted. I'm going to go over the inflation data and basically show personally in terms of why I think it overreacted. And then at the same time, the market spoofed about the tariffs. Arguably so, makes sense. I would assume over time this is going to get resolved anyway. I'm not really worried about the tariffs too much because in my opinion, the administration right now is focused on other things, and then later on we'll be pulling back to the market in terms of focusing on growth for the market, etc. But you could argue everything they're doing technically will be better for the U.S. economy overall, and then that will pull the market up in time. The only problem is, for the time being, everything is quite hectic. And again, the focus is drawn away for the market for the time being. Not too worried, in my opinion. But again, this is just my opinion. So please do your own due diligence and research before buying and selling. But again, the auto industry, in terms of tariffs, is a big heavy hitter because it's like a web of a bunch of not conglomerates, but its web stretches out pretty far because of the supply chain and all stuff and suppliers, et cetera, et cetera. So it's not just the automakers themselves. That's the problem. That's the biggest factor. But either way, I'm going to go over through everything, and hopefully you guys enjoy the video. Hopefully you guys like it. If you do, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And again, given that it's tax season, Free Tax USA, link down below. Free tax software versus TurboTax, exact same setup for the most part, basically. Free federal filing. State filing is $15 versus TurboTax is about $25, sometimes higher depending if you file closer to filing date. Used them in the past before, got the same tax refunded amount and all that stuff. Again, if you use the link down below, supports the channel, so thank you so much for that. I do appreciate it. No extra charge to you. And that's it basically for that. Now, in terms of economic calendar, just high level quickly, and then I'll go through investor sentiment for the time being actually first, and then economic calendar, then cover the technicals. But bullish sentiment has increased, which is surprising because the technicals are pointing downside, which is interesting enough. But for the month March 26th, for the week of March 26th, it's increased to 27.4% versus previous weeks. We've seen a decline over time, and it's still lower than historical average though at 37.5%. But either way, increased nonetheless to 27.4%. The bear sentiment has decreased to 52.2%, but still quite higher than historical average at 31%. And then in terms of economic calendar, just a high level basically. For Monday, March 31st, we have Chicago Business Barometer PMI for the month of March. Tuesday, April 1st, Richmond Fed President Thomas Barkin speaks. And then as well as S&P final U.S. manufacturing PMI for the month of March, construction spending for the month of February, ISM manufacturing for the month of March, job openings for the month of February, auto sales for the month of March. We have on Wednesday, April 2nd, ADP employment for the month of March, factory orders for the month of February, and then Fed Governor Adriana Kugler speaks. Then on Thursday, April 3rd, we have initial jobless claims for March 29th. You have U.S. trade deficit as well for the month of February, S&P final U.S. services PMI for the month of March, ISM services for the month of March, Fed Vice Chairman Jefferson speaks. Fed Governor Lisa Cook speaks as well. Both of them is respectively at 12:30 p.m. and 2:30 p.m. And then for Friday, April 4th, we have U.S. employment report for the month of March. Previously it was 151,000. This time around, expecting 140,000. U.S. unemployment rate previously was 4.1%. This time around, 4.1% as well. This is for the month of March. U.S. hourly wages at 0.3%. This time around, expecting 0.3% as well. And then hourly wages year over year, 4.0% previously, 3.9% this time around expected. And then we have Fed Chair Jerome Powell speaking at 11:25 a.m. And then Fed Governor Michael Barr speak at 12 p.m. And then 12:45 p.m. Fed Governor Christopher Wheeler speak. Now, in terms of inflation data as well, too, one thing, the data I think is blown out of proportion in my opinion because it came out on Friday, March 28th, It was PCE inflation number. The Feds regard this inflation number as more accurate versus the CPI and PPI inflation numbers, which is interesting enough because every time I cover this and stating that it's more important than CPI and PPI inflation numbers, at the same time, there's times that they go over those numbers more than the PCE inflation numbers. It is constantly going back and forth. But the reason I say blown out of proportion is because the PCE index, so the non-core, right, which basically has energy included into it, it came in at 0.3 or 0.3 previously, expected 0.3, got 0.3. PCE year over year, again, non-core, 2.5 previously, expected 2.5, got 2.5. So with energy included, everything's flat. With the core numbers, so energy is removed because given how volatile it is technically in terms of cost, the core PCE index for month over month basically, previously 0.3, and then this time around they're expecting 0.3, but got 0.4, so slight increase, not much. And then core PCE year over year, 2.7%, previously 2.7% expected, got 2.8. I've seen numbers way higher than this before and the market reacted negatively, rightfully so, you could argue, right? Obviously. But this time around, it's slight increase, you could argue, because the narrative was that the inflation was coming down, and this shows that there's a little bit of a hiccup. But these numbers usually get brushed off. I think the market overreacted, in my opinion. But then you could argue the tariffs portion makes sense, et cetera, et cetera. But in terms of the market movement, though, it's not looking too pretty at all. We see downside all across the board for the most part. You could argue that we were due for pull downs overall because, for example, this is the S&P 500, specifically ETF SPY, but it's ETF for the S&P 500. And then this is a channel dating back since 2010. We've seen resistance, support, all that stuff, et cetera, et cetera. And we've pretty much got close to the upper limits, not necessarily meaning that we don't continue to the upside on the market. We've seen back in 2013 all the way to 2015, it was by the limits, but it was continuing on the upside regardless. But you could expect some kind of pull downs nonetheless, as we've seen in the recent years, give and take, dating back since April 2024. And then at the same time, we are levels that potentially you could argue were due for a bounce, but overall, S&P, NASDAQ, and Dow Jones are showing strong indications to the downside, and reversal could happen at any time with removing of the tariffs, inflation improving, all that stuff, but pretty much everything is doubling down to the downside, which is unfortunately. So if we're looking at the MAC line for the 1 year chart, it is in the bullish movement. Technically, you could expect maybe a reversal, but I'm not expecting it because the 5 year and all chart is committing to the downside hardcore. So 1 year chart, MAC line, bullish movement, potentially crossing over to the bearish movement, especially with the data points coming in predominantly on the sell side, and has been increasing more on the sell side as well. 5 year chart right about here, bearish movement, still strong to bearish movement, data coming in more on the sell side as well. And then with the 50-day moving average on the 5 year chart, it's pretty much try to test the 50-day moving average, but yet got pulled down with the red candle and did not pass it, just false breakout only. Alt chart is in the bullish movement still, but it is going to cross over to the bearish movement, in my opinion, especially with NASDAQ has already crossed over to the bearish movement. But we have the volume increasing more on the sell side as well. So sell side has been increasing overall with the 1 year, 5 year, and alt chart. And if you were looking at potentially support, this is ETF SPY again, ETF for the S&P 500, closed at $555.66. I would be expecting that support at this level right about here. So previously we saw a drop, substantial drop here. There's a couple of support right about here. There was a support right there if I zoomed in earlier. Or not, I didn't zoom in earlier, but if I did zoom in, you'd see it a little bit more predominantly. And then it kind of cross-references with a little bit of moving averages, but I'll go over that soon. But basically looking at support at $538. Again, that's $538, and right now we're at $555. Can it go lower? Obviously it can, but I'm hoping for support there. And then worst case scenario, if we were to drop down significantly, is the 5 year chart at the 100-day moving average. And you can see a nice candle drop down right about there, which crosses over the 100-day moving average. And if that is the case, you're looking at support at $512. So quite a big, massive drop from where we're at right now. Hopefully that is not the case. And hopefully the level I mentioned earlier is the actual support level. But $512 is a possible avenue we could go down to, because again, the alt chart is potentially going to be crossing over to a bearish movement for S&P. Can it be short-lived? 100%, right? Now, you could argue we had a support level right about here, but we've seen back in October 2023, it dropped down and then bounced back up for a continuation of the bull side. I would say there's a chance without even that massive support level being existing where we're at right now, because anything could change at a moment, right? And if that is the case, then we could reverse to the upside completely, but we'll see. Just basically have to assess the data as it comes in and the news as well. If we look at the NASDAQ ETF, looking at specifically ETF QQQ, ETF for NASDAQ, closed at $468.94. And just like the S&P, the 1 year chart, bullish movement, potentially crossing over to the bearish movement, volume increase more on the sell side as well. Let me just see, but there's a massive red candle right there, so it's kind of blocking it. But you can see volume increase plus predominantly on the sell side. 5 year chart, bearish movement, volume coming in data as in more on the sell side, and the alt chart has actually crossed over to a bearish movement. Hopefully you guys see it, a little bit of red right there, and volume increase as well, more on the sell side as well. And then you could argue, just like the S&P, we were kind of due for a pullback a little bit, dating back since 2010, upward trend resistance level, upward trend support level, dating back since 2010. Yeah, false breakouts, well, not false breakout, this was like pretty much a massive breakout, 2020 to 2022, and then false breakouts right about here. But you could see clearly this line does exist, for example, again, all the way dating back since, when was this, 2014 to 2015. We have a support bounce and et cetera, due for a pullback. And then we were testing the 50-day moving average on the 5 year chart, but unfortunately did not break through, got pulled down, red candle right there, et cetera. But yeah, 1 year chart, bullish, bearish crossover, and then not bearish crossover, bearish movement and continuation with the data coming in more on the sell side as well. And the alt chart has been in the bearish, just crossed over to the bearish movement with data coming into the bear side. So it's quite significant, pretty much indications to the downside continuation, which is unfortunate. And if you're looking at support possible zones, I would argue maybe we're heading down to this area where it was a drop as well, coinciding with resistance and support level all across the board. If I zoom in, you can see a little bit more support levels, but predominantly resistance and the support right about here. And that price point is give or take about average price, about $448, right? $448, and we're at $468 right now. And then technically, because the pull downs are so massive, we could, just like the S&P, go down to the 5 year chart. 5 year chart, 100-day moving average was about $437. So $437 for the NASDAQ / ETF QQQ. And the Dow Jones, exact same thing. 1 year chart, bearish movement, bullish movement, but potentially crossing over to a bearish movement. 5 year chart, bearish movement continuation. You could argue we might be bouncing off the 50-day moving average because this one's a little bit different. But given how all the sectors are getting pulled down, I'm expecting more pull down nonetheless. And the alt chart, same thing. It's potentially going to cross over to a bearish movement as well. And in terms of support levels, you could argue we could have a support level dating back since April of 2024 with this upward trend support level coming down to this level, which the Dow Jones closed at 41,583 points. And we could be hopefully potentially looking at support at the 40,480 points, give or take. Just depends on when we meet this, right? It could be 40,500. So 1,000 points drop, or 1,100 points, give or take. But I'm expecting potentially, if that is overall going to be like a continuation to the downside, we're probably going to come down to this upward trend support level dating back since essentially March 2021, because there was resistance right about here and then support all the way across, and then there was support as well. And then this moving average is probably going to meet us by the time we get there or something like that. So you're looking at support basically about the 39,100 points. If we come down, have a continuation to the downside. Obviously, it's not going to be a quick drop overall. What's going to happen most likely is going to be bouncing off these support levels, come down, dead cat bounce, et cetera, and then come down to this level, which is about 39,200 points when it meets there, or 39,100 points, give or take. It just depends on how fast it drops. But that's basically it for today's video. Thanks for watching. I do appreciate it. Hopefully you found it beneficial. Hopefully you liked it. If you did, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And again, link down below for Free Tax USA. It does support the channel. And next, again, no extra charge to you. Thanks again for watching. Take care. God bless and peace.